and maybe we can move to Chris. And you mentioned, Chris, the fact that obviously you're dealing with institutional investors. I was just wondering how, given that your focus is essentially been to paint the opportunity set for the investment in infrastructure in Africa, how do you normally pitch to those institutional investors, and how do you present to investors a possible infrastructure pipeline as a vehicle for investors to invest in?
Sure, thanks. I think again, another great example of coordination and cooperation. I think the key to that question actually is not that we want to pitch. As a development agency, and it's quite difficult for me, coming from an investment banking and hedge fund background, it's not our job to pitch or advocate or say, this is where you should be or this is what you should do. We have to have respect for the investment community, especially the pension funds, that they have a mandate and a responsibility to invest responsibly for their future pensioners. So the principle for our objectives is to align our interests, to say these are commercial interests to you and these are development interests to us. And getting there is in fact the challenge. What we are hearing from the pension funds and what we've, in our conversations, what we've heard is there's a risk threshold. As Terence mentioned, there's just higher risk when they look out into the continent, and unfamiliarity. Currency is a big issue. A lack of familiarity with private equity and how private equity would look if you're going off the exchanges. The cost of transactions actually pre-close, which may fall into project preparation. There's a lot of conversation yesterday about project preparation and getting these potential investments to investment ready. One very specific conversation with a trustee at a major pension fund mentioned that the cost of a $50 million deal that was going to happen on the continent required about $200,000 worth of legal fees prior to the investment. And those legal fees, that $200,000 ticket, was too high, too much money for that $50 million deal. Now, coming from my background, you would spend that $200,000 several times to get to that $50 million deal. So that was something that we heard that we found was kind of surprising. Getting into now, how do we address those as a development agency? One of our biggest tools is a loan guarantee. So we can do a 50% partial guarantee for a commercial lender. Just walking through an example, in Dakar, we partnered with the Gates Foundation and the World Bank to do a guarantee for a municipal bond. Ultimately, the Gates Foundation did all of the technical capacity to get the city into a place where they were able to issue and service debt through a bond. The USAID gave a 50% guarantee, and the World Bank arranged the credit score and the credit rating. The bond is fully subscribed. Institutional investors were on board. Unfortunately, at the last final hour, the national government took away the authority of the city to issue debt, which was a surprise, and so we'll call this deal sort of on life support. But that brings up to the regulatory framework, which is an ongoing issue. So there's layers and layers and layers. And the idea behind our approach is to sort of peel back each layer, but peel it back with the potential investor. The other thing that we've heard is co-investment. So institutional investors in South Africa and institutional investors in America are interested in infrastructure and projects in the region, but they would be more comfortable if a local pension fund or there were local investors on board. So facilitating that is of interest to us too, and to find out that good mix. And lastly, and I mentioned this briefly, but project preparation, getting them to that investment status. We are working closely with a major entity right now to build a for-profit commercial project preparation facility. So that's sort of an overview of what we've heard, what we're hearing, and the ways we're trying to approach it. But if you take away anything, really what I said at the beginning is the most important. As a development agency, we aren't trying to pitch or advocate or push money in any direction. We're trying to align with the pension funds that are trying to diversify their asset allocation, that are looking at the timing of these potential infrastructure investments as in sync with their needs for long-term investment, and finding ways that as a development agency with a presence in the majority of countries in Africa, what our existing activities and programs and opportunities to facilitate those are.
Okay, thanks very much, Chris.
Doing business in Africa. You can't afford to be without Africa Investor.